Good evening, everybody. It's Jeff Scott here in Columbus, Ohio, and welcome to tonight's weekend review for January 13th, 2013. Welcome to anybody that's new, and welcome back to everybody that's not. I hope you all are having as fun in the market as I have had since late 31st. It's been quite a run. Question becomes, when does it stop? And maybe we'll make some comments about that tonight. I always start with a couple of slide disclaimer, as everybody uses. This is for educational purposes only. It should not be construed as investment advice. I'm a doctor, not a broker. Unlike most people that give these programs on YouTube and other places, I don't actually make money selling you software or giving you advice or giving you education. Someday perhaps I may do that, but right now I do this mostly for my own education as I learned by teaching others. I'm not affiliated, nor do I own any investment software companies. In fact, I also can tell you that I paid for everything that I show you today. I keep this slide in here because it reminds me that it's not over yet. You know, the Cliff saga, I guess the fact that there was a compromise or so, or you could also call it a cop-out, whatever you want to call it, has created some delirium in the market. But the reality is we've still got to deal with this debt ceiling, which is coming up. And I think you're going to see a much more of a larger fight. If you think back to TARP and others, markets took major dumps during some of these deliberations. We also got Obamacare and who's going to pay for it. So as much as I'd like to believe we live in the land of market only going up and good and plenty, I think we've got some major concerns. I have a lot of programs. You'll notice when I turn off the PowerPoint, you won't see any icons. That's because I purposely hide them when I give these talks, because if not, I could be answering questions for weeks about which programs do I use. At the end of the day, in the market, I either need TradeStation, Thinkorswim, or both. Aftermarket, I use different programs for analysis, such as High Growth Stock Investor, Edge Rater, and various seasonal programs, most likely Magenta. And then I've learned a lot from Ian Woodward and Ron Brown, and I subscribe to a number of their services as listed there, some of which are free. I have my style, you have your style. You don't have to like my style, you don't have to like yours. But I'm not a certified market technician. This hasn't been my life journey. I've learned my style from reading and watching and listening to others, whether it was O'Neill and Can Slim, Brown and Woodward, and how to take that to the next degree with highgrowthstock.com and some of their ideas incorporating Bollinger and Arms and others. O'Neill and Katcher when it comes to pocket pivots, Alexander Elder and the Force Index, Van Tharp with position sizing and money management, Bigelow and Candles, and others. Here's some of the websites that I've gotten a lot of value out of. If you don't know them, just stop the tape and write them down. It's probably a mistake, but I will frequently say I'm going to put that on my buy list. Now, the reality is I'm not putting these on my buy list. I'm putting them on a watch list. And it's a watch list that could be long or short depending on what I was doing at a given time. And then based upon what the market does tomorrow, if the market is appropriate and the wind is at my back, then I might actually pull a trigger. That means if I want to be long a stock, the market's got to be long, and that sector needs to be holding up. Since it's about 8:15, 8:20 on Sunday night, I know the futures are a little bit positive, but mostly flat. I have no idea what the market's going to do tomorrow. So I can tell you things that I find interesting. I can't tell you what I'm going to really do. I like to automate things, so I work within TradeStation and Thinkorswim using some indicators from Market Gauge, Never Lost Trading, and others that help me. Now, other questions I get, well, Jeff, what kind of a trader are you? Well, you could be a day trader, a swing trader, or a position trader. And I think I'm probably between the last two. I buy swings. I like to buy stocks that have pulled back, that are swinging up, who have good fundamentals. If I make a really good choice and the stock goes into a long swing up, then it's probably turning into a position trade and may last a few days to weeks to even months. If, on the other hand, I make a bad trade or the market goes against me, I could get taken out the same day. So when I do a day trade, it's usually because I didn't make a good trade on my swing trading. I guess when I want to feel like I'm doing a sport, or maybe I need a buzz, I'll actually day trade mini futures on the S&P 500. And so I will day trade those, but for the most part, and certainly for this conversation, it's going to be about swing to position. Once I identify a stock and I'm comfortable with the market direction, I'm going to look for triggers. Market gauges, I've got some opening range breakouts programmed into TradeStation, a number of different reversal systems. From David Elliott, I learned about mobile breakdowns and breakouts. Specific candlestick formations and patterns, red candle high, green candle lows, pocket pivots, kahunas, changes within the moving averages, so many different things that I use to help trigger a buy or a sell. We'll talk about many of them tonight. As usual, I'm going to do a review of the week. I'm going to do some top-down approach. I will show you some of the shortcuts, including scanning for setups, which I haven't usually done. And based upon time, we'll look at some of my other programs I want to be done within an hour. Actually, not ready. Just want to, while I'm talking, I remember I shut down EdgeRater, so I want to bring EdgeRater up because I want to use it for some of my education tonight. And Edge Club. All right. Woodward and Brown, Ian on the left, Ron on the right, brilliant technicians have created a number of their own indicators, many of which that I use, some of which I participate in the development. If you've never been to their live meeting, it's coming up March 23rd, 24th, and 25th in Palos Verdes, California. There'll be other guest speakers, including myself. Best investment I ever make, and I do pay a full payment to go, and I have gone twice a year for the last 10 or more years. I met Ian originally back in the early 90s when he did some programs for Telescan. Highly recommend that. The website, the URL is right here. If you go into the URL, let's see. I guess it's not going to do it. Maybe it will do. Let's see. If you go into highgrowthstock.com and it's actually going to open up. Look at that. There's a couple of key things I want to point out. If you go into reports, you can drop down and get Rob Brown's market reports, which are outstanding. He's been doing them weekly again. If you go down to mine, they're just long. But you can find programs like this that you can download on the site or watch on the site. Ian Woodward has an outstanding blog. All this so far is free, which he puts up there on the website. And you can go to the products page, or I think probably the home page that you go to first, and you can get a 30-day free trial, no credit card required. And then if you've already got it, go into Support Learning Center. You'll see a number of my older videos from Ian and Ron, David Steckler, Dr. David Ghilardi, Dr. Ebert and others, Paul Duncan, that are also very useful. And then if you load the program to make it look like mine, you have to put the add-ons as well as the, both of them are in there, there's 2 add-ons, and then more information about how to use the program. All right, so first question is, what's the market doing? Now, I'm a back testing fan, but to understand what the market's doing, I like to take a look at what it did this week. So one of the things that's built to HGSI is called group performance analysis. Here's the futures up 2 points, Dow up 15, 2 points on the NASDAQ, Russell down a titty, really not doing much at this hour. So what I like to look at is from the end of day Friday the 4th to end of day Friday the 11th, how did the market do, to give me an idea of how I did, but also what's working, what's not working. So I scan down real quick. I see more black than red, so it was a positive week. I find the S&P 500, see it was up about 0.4. I noticed that my portfolio, which if I didn't manage it and left it the same week to week, which is not the case because I have hedges, I'm long and short, I buy and sell during the week, I've got options strategies. But if I just left the names the same and put equal value shares of them, I was up a little bit over 1%, so I outperformed the market, which just makes me happy. But growth stocks really did better, 1.98 for the IBD 50, 1.4 for the HGS 100, both outperforming the market substantially. The IBD 50, by virtue of it being a smaller index, it's not surprising that it outperforms, but it also underperforms in a bad week. Also, you can notice on my buy list that my buy watch was up 1.42%. All that tells me is the kinds of stocks that I like had a good week. I look at performance of various lists that I track. And my green candle lows, which is one of my favorite scans for Sunday, was up 3.94%. Technicals, relative strength, breakouts, pocket pivots, all outperformed this week. What didn't perform, a lot of my bearish scans, which were looking for potential shorts, you can see there. All right, so the market was a strong market, although it ended on a downbeat. I look at Edge Rater. So before I jump into Edge Rater, I'm going to assume everybody knows what Bollinger Bands are, but I'm going to show you what we've learned from Ron and Ian. So if you take a cup of water and you assume the upper border of the cup is 100% or 1.0, and the bottom cup is 0, then halfway up is 0.5. And you could look at a cup, and you could tell me, is it above of water? Is the water above or below the midpoint? We could actually take slices of that cup and have 10 slices from the first decile up to the 10th decile. And if you could measure, you could tell me how much water was in that cup. Now, we also know that in stocks, if those upper and bottom are the Bollinger Bands, that the majority of the motion of a stock is going to be between the upper and the lower. In an uptrend, it's between the middle and the upper, and a downtrend between the middle and the lower. And that up to 5% of the time, stocks might be below the lower, and up to 5% by design, they might be above the upper. So if 90% of the time a stock's going to live between the upper and the lower bands, what's the likelihood that the stock is going to correct if it gets above or below the band? And I think that likelihood is high. So to get a sense of the market, we can look at every stock in an index, and we like to use the S&P 1500. And we can get an idea, is it above or below the midline, give you a sort of a basic strength assessment of the market. And then where are most of the stocks trading? And then do you have a lot above or beyond? So Edge Rater does this. It's called the buckets. I just hit this little arrow and take a few minutes. And it integrates with HGSI data, so it's not a separate data feed. It does a lot more than I'm showing you, back testing. You can update it during the day to get buy signals for the market close. So I see it's at about 82%, very bullish, with 82% of the stocks above the midline. And only about 5–6% are trading above the upper band. The average stock is midway above in the area between the middle and the upper band. So not overextended. Now if I go back a week, so the 4th, you could see a different picture. You can see 92% above the midline and 35% were above the top line. So what we saw was the market was extended, but rather than have a big sell-off this week, we really saw it go sideways, taking out some of that excessive exuberance and eliminating this big fraction trading above the upper band. Now, I like to look at charts, and to do this, I'm going to go into the warehouse view of HGSI. I'm going to go down to Woodward and Brown groups, which is what you get when you go into that learning center, and I download it from the learning center. And so if I go down to Woodward and Brown groups, I open up Major Markets Plus. I go to top down, the T. The T gives me a pure technical view of strength, and it factors mostly in the last week, but does look at 2 and 3 weeks as well. So it gives me a sense that over the last couple of weeks, where has the strength been? Now, I could search by 5-day, and I could see over 5 days the S&P 500, like we saw earlier, was up about 0.4. And over the 5 days, the bond shares are stabilizing. That's not usually a good thing for the market. The S&P 500 over 5 days is right in the middle. And the loss over 5 days were in volatility, utilities, the dollar, and small caps. And small caps were clearly, for some time, had been leading. If we look at Friday alone, you see that gas, silver, volatility were down, and the bond shares picked up in the majority of their rise. In fact, outside the bonds, everything was flat or down on Friday. Friday, to me, felt like a bummer of a day. Now, when I looked at my performance, I gave back some profits that I hadn't taken out yet, but it still wasn't a horrible day. I just was starting to get spoiled. So based upon the combo, which takes into account multiple weeks of activity, the lead group is the NASDAQ. So what I'm going to do real quickly is going to look at the major indices and comment as to where I think they are, perhaps some support and resistance, and what I think is going to happen. But I really don't know what's going to happen beyond the futures that we've seen. Here's the NASDAQ, and you're going to see some themes that repeat themselves, some good themes. That doesn't look like a chart. So what are the good themes that repeat themselves? We've seen the moving averages flip-flop from a downtrend where the longer ones were on top of the shorter ones to a appropriate lined up for a bullish market with the 8-day exponential on top of the 17-day simple, the 50 giving that golden cross above the 200 today, and then the 200 below. So the indices have lined up in a more bullish stance, and the stocks above the indices. We've gone from, and let me clear my notations and show you, if we go from the top, red candle high, to green candle low, we look at 38 periods and a drop of 12%. And then from that candle low, green candle low, to the high, closing high on Friday, we've made back almost all of that in 37 days. So this is sort of a very symmetric decline where even though the tenor of dropping was probably a little faster than it felt on the recovery, we've pretty much made up percentage-wise much of what we lost. But if you remember, if you start with 10 and lose 20%, you're left with 8. To get back to 10, you've got to go up 25%. So we haven't made up for what we lost. Looking at the chart, what else do I see? I see uptrend, which I talked about, a pocket pivot on Friday. Everything's green in my momentum indicators, and we're not quite up at the top of the high jump. So I find this to be strong. We had a big gap up day, and it was probably the 31st. Let's see. And 31st was a big day, and then on the 2nd, gapped up, feel the sign, went sideways, and looks like it wants to go again. NASDAQ looks, frankly, looks strong. Take a look at the Dow. You're going to see the same pattern, although it's very clear that it fell much faster than it came up. And again, I'll put my notations on the chart. Go from the high to the low, and I've got 28 periods, drop of 8.7%, and then back up now I have 37 periods, and we've come back 8.9, or about 8% as well. So again, the same type of pattern that you saw on the NASDAQ, lined up. You never had the 50 cross below the 200, so everything is lined up, frankly, quite bullish looking. I just have this gut feeling that momentum is starting to slow, but all it will take is a strong Monday for me to maybe change my mind. But we'll see. I think that we've had a major run. Small caps led this rally, and they've gone sideways, so they're stalling. Are they pausing to refresh, or are they going to roll over? Where are we in the cycle? Are we here with uncertainty with a good chance of breaking up to go higher, or are we rolling over into fear? And it remains to be seen. If you go just by the numbers, it's a very strong market. If I look lastly at the S&P 500, again, the same picture, pullback, a nice recovery. On several of these, we are in long time or high territory. Let's take a look at what we have here. We are right at the September highs on the S&P 500. And if I switch to a different view that goes on longer, let's see. Oh, come on. I just want to look at a view that doesn't have a lot on it, so it probably gives me some great longer cards. It's just a simple moving average chart. So I'm just dragging it down to mine, so I now have it in my setting. And if I put it on a monthly, on a weekly, you can see from a weekly perspective, we're breaking out to new highs. On a monthly, we still have not taken out the 2007 highs. So we've got a multi-year, but we have not taken out the before the 08. So it gives you a little bit of a perspective. So all the indices, as we've already talked about, seem to be doing well. And it's certainly a bullish phase. Are we running its course, or do we have a lot more room to go? And frankly, this is why you're going to have to watch the market and make your own opinion. I use a lot of tools to help me. I look at VectorVest. I look at AbleSys. I have a number of other proprietary timing mechanisms. And right now, this market looks very strong. I like Elder. It's a quick look what Elder looks like on the NASDAQ, for example. So those who are fans of Elder looks for a number of different things. First thing with Elder, we look at the color of the day. If it's green, you can buy. You can't sell, or you can hold. If it's red, you can sell, but you can't buy. In blue, you can either buy, sell, or hold. So you got a blue bar on the daily, green on the weekly and the monthlies. It got outside the envelopes and it pulled back in. And right now we're running up the envelope, which I have seen it do for prolonged periods of time. Now, if I want to find a reason to be bearish, I do see a reason on this chart to be somewhat bearish. And the reason why I see it to potentially be bearish, let me see if I can draw this, and I'm not a great drawer, is I think you could draw a trend line that suggests that you have a bearish divergence on the S&P 500 using the Elder MACD. And I say that because we are getting higher highs, but we're not making higher highs on the MACD. So that's something that would suggest that we might be having potential for reversals. Now, I do like divergences a lot, and so I have a number of scans that I run, and let me see if any of these perked up something that might be intriguing. None of them picked up obvious divergences in the indices. All right, very good. All right, so Gestalt for me, market up, closer to topping than to starting a rally, I still have concern, and therefore I will employ my version of money management to help manage my concerns. My version of money management means stops, tightened, profits taken, number of positions reduced, potential puts put into play, and looking at index options if the market seems to go the wrong way, and also looking at contra ETFs. My bias is still leaning long until I see a reversal sign, which I don't see in the charts. Now, once I've reviewed the indices, I want to look at industries. So I got on industry groups. Now you can see there's 145 industry groups, and based upon several weeks of performance, the top group is oil and gas refining and marketing. Well, it's a strong group, but I really could care less about 3 weeks ago, so I'm going to go into the force, 2-day up. So the force index, for those that are newbies, is from Alexander Elder, takes into account today's volume times the close today minus close yesterday. So the direction is determined by the close. The degree is a bit of the close, but mostly driven by volume. So anything that drives a lot of volume, a secondary, a takeover, or a stock like Citi, JP Morgan, that has a ton of volume will often be at the top of one list or the other. It takes plots it daily, and we look at a 2-day exponential to get an idea of what's happening in the market now. So 67 groups passed the positive force filter. Let's take a look at a couple of them, and I'll point out some stocks. So computer electronics retailer, my guess is it's up because of all the takeout speculation on Best Buy. If you like playing arbitrage, you might want to look at this one. I don't, because I don't know when it's going to happen, if it's going to happen, or at what price. And the stock already reflected some interesting things happening this week. If I didn't know the story, I would be very interested there, although it's in a downtrend, and I don't like to play downtrends. But multiple kahunas, huge volume, breaking above the 50. This should run up to the 200-day moving average, which is about $3.50 on a $14.50 stock. So that's a 35% move. So people might want to jump into it. Has great cash flow, just no earnings growth, and I think the company's a mess. Now, interestingly, GameStop, I haven't thought about them for a long time. They showed up on the screen today. And as I look at it, I don't get it. It's got some earnings coming in, a lot of red in the momentum indicators. Clearly has pulled back. Did have some volume in an up day on Friday. I guess you could say it's trading at, it's made a little micro base, went back to a congestion area from November, and maybe this is a place to grow from, but it didn't excite me that much until I looked at Electronic Arts and Take-Two Interactive, which you'll see, and that might be something to play that. Cons, I got to admit, I hate the store. I mean, I don't get it. Frankly, I don't get H. Gregg either. But I guess if there's a housing boom and you need mid-level stuff, they're a great place to go for appliances and electronics. And clearly in the lower left, upper right, they've had great earnings per share growth. They trade at a multiple of 20, pulled back to the 50-day moving average, which is also known in the land of HGSI as free parking, setting up perhaps a good place to buy. And frankly, it made it to my weekend list as a stock that I might take a nibble on this week. I think it's a very opportune time for that. And I just want to open one quick thing up while I'm sitting here, and I'll let it do its work while we're doing our thing. Market Smith. Market Smith is another IBD company product or sister product, and I love using it if I have questions about earnings. And I know going forward we're going to have some earnings per share questions. So cons, lower left, upper right, pull back to the 50. And I always just right-click, click to add to group, and I've got a group of stocks for Monday to look at, so I just threw that in there. All right, enough of these guys. There's my Market Smith. close this down as well. I'm going to right-click back, and I'm going to go to automobile manufacturers. And these guys are getting Toppy by High Jump. Take a look at Ford Motor Company. What a beautiful run. Had a doji, gap up doji on Friday, high risk of gapping down and forming an evening star and pulling back on Monday. Very extended. You can see it's up at the high jump, hit the high jump here before, pulled back. It's at that point in time where one would expect a pullback. It's had a phenomenal run. In fact, when we looked last time, it was up 35% in 97 days. Where are we at right now? $110 days, 60%. That is a phenomenal run on Ford Motor Company. And frankly, if you've been in their cars, pays a small dividend, 1.4%, it probably is deserving this run. So I think it needs to pull back, so I'm going to pass on this one. For those that don't know the high jump, what this is Ian Brown's, I think will turn out to be one of his best contributions to the literature of technical analysis and investing. You think about a rubber band, when you let go, if you pulled it, it snaps back. If you pull it too hard, I guess it could break. Same thing happens with the stock. If you say the rubber band consists of the 200-day, the 50, and the 17-day in price, eventually you get so pulled away from those moving averages, you're going to retreat. So the high jump takes the price minus the 200, price minus the 50, and the price minus the 17, adds those three numbers up and plots it, and I look for the highest high jump over a period of time, and that's usually when it's going to pull back. Now, I have coded it, for example, into TradeStation, where we've re-nicknamed it the ATM indicator because it tells you when to take money out. And what the ATM or high jump indicator does, and I can set this up, I think it's setting at, I think I've set it for 200 days. I can set up my scan, so it's going to look at higher than 90%. I could set it higher than 100%, and I set the look back period to be, it's looking back 300 bars. So it's looking back over a year, and it's telling me the high jump for today, how does it compare over the last 300 days? And when I see a number of 100%, it tells me that it's the highest it's been in the last 300 days, and you can see Ford is one of them. And what we've learned from Ian and Ron, that this is a place that these stocks like to pull back from. General Motors also extended a nice move. Probably more noise on this one related to buying back shares from the government and getting a little bit more flexibility. Has not become, not as extended, it looks, as Ford from the indices, but the high jump is up near the top regardless. Thor Industries, two of these, this and Winnebago, they make RVs. Both of them have attractive charts. Thor has already reaffirmed earnings, even though it pulled back. Saucer bottom here. Is it going to take off, form like a cradle pattern? Everything is green. Pocket pivots last week. Great earnings per share growth, higher than the multiples, pays a small dividend. This is one to like. And if you want not a pullback taking off, but a stock that's leading, you can look at Winnebago, which is pulled back and is running again. Look at those earnings per share growth. Hard not to like something like that. Trades at a multiple of 40, does not pay a dividend. Those are two very powerful industries. Communications equipment, it's all about RIM. Remember I said that volume matters? So RIM, not only did it have a big price move, but if you look at the volume was 16 million. On Friday, it was 111 million shares. On the average days, it's like $10 million, 10 million shares. So they had huge volume. I think what's driving it is more and more companies, carriers are saying they're going to pick up the BlackBerry 10. I can't remember if there was a secondary to drive that volume, but that's huge volume. So looks like a breakout from a short base. May take out the highs of the last couple of months tomorrow. Kahunas, lots of volume, everything green. Doesn't make money. I don't like stocks that don't make money, but there's a lot of interest and hype around BlackBerry 10. Computer storage and peripherals, take a look at SanDisk and the two disk companies. These companies are, have got a lot of earnings coming into them. They've been choppy at best. Here's SanDisk in a nice little run here ever since middle of November, continues up nicely. Everything is green, makes money, but slowing earnings per share rate, trades at a multiple of 20. I like, in this case, sometimes I want to go into MarketSmith. And I might, all right, I hate when I keep hitting the wrong button. Let's try one more. And I'll put in SanDisk and try to get an idea of a couple of different things. I like to look at earnings per share going further. And I see it stubbed its toe in 2012. But we'll make $3.50 in 2013 with a great growth rate. Now, $3.51, if it met that and kept a PE of 17, that's 51, that's about a $60, $63 stock. That's a 20%, 25% run from here, so that's attractive. And then I like to look, one of the things that they do here that I think is very cool, it shows me their 5-year PE range, and it's clearly near the lower part, although not the lowest part. So I find SanDisk interesting. I'll just show you Seagate, because Seagate and West Digital look the same. Great earnings per share growth, got no pricing respect, trades at multiples of 4.3, pays a dividend of 4.6, which is attractive, in a nice move with a number of pocket pivots. I'm in this stock if the economy turns, if PC shipments go up, if the economy does anything to expand multiples, this stock will take advantage of it. Although I'm not silly, I have stops. Now down the list, semiconductors, I bought Intel a couple weeks back after one of these meetings when it broke above, I think, the 200. And Intel's the highest one on the list here. Actually broke above the 50. It pays a huge dividend, 4.1%, trades at a multiple of 8.5. Turned everything green. Yes, I would like to believe someday this comes back. This is not high growth stock investing. It's bottom fishing, but I bought into that. ARM Holdings has been one of the darlings in this space, mostly I think because it actually makes money. It creates some of the tools that are used inside an iPad, an iPod, iPhone, etc. You know, it's getting pricey. Look at where the high jump bar is, and you can see in the past, hit the high jump, pull back, go sideways. Hit the high jump, pull back, go sideways. But what do you think it's going to do now? I say it's going to pull back and or go sideways. Internet software and services. I'll just look at Baidu. A number of these were moving last week. I think we talked about some of them. Baidu was, you know, junk on the bottom, I guess. If you're a $92 stock, you're junk. But we go back to just my moving average view. Well, I brought it down, didn't I? Yes, I did. And we expand this view. You can see that Baidu has been in a decline since, well, peaks were in July of 11. It's coming up against the 200-day moving average, which would be worrisome, and perhaps enough reason to be careful about getting into the stock here. I guess the time was a week ago or 2 weeks ago. You can see the 200 there, likely to be resistance. On the other hand, there's a resurgence in China, and this has historically been a leader. It makes money, has earnings per share growth. trades at a multiple lower than its growth. I think the easy money's been made. I'd like to see it get above the 200 and stay. But this is an interesting stock. Yahoo got hammered. I think I want to show you something on Yahoo if I can. Yahoo had a big lead. It pulled back. So you know that you may notice that I scanned for red candle highs and green candle lows, among other things, now on a regular basis. So there is a definition of these, and I'm going to show you why I like them. One of the downsides of hiding my desktop is I've hidden my desktop. So actually I don't want that. I want my computer. View from my desk, as I've said before, although not my desk here. Now, I don't send this out because it was given to me and I wasn't given permission to share. But those that attend the meeting in Palos Verdes that I mentioned, I'm going to give out some of these scans as much as I can at the meeting. I think that there's certain things I can probably do. Somewhere in here, that's one of them, but that's not the one I wanted. Of course, now I can't find it. Well, what I wanted to share with you were the power, let me see if I can find it this way, the Word document or text document, so you can see exactly what these are, because I've been posting them and I like people to get value out of them if they can. So a green candle low means your low is your lowest low in the last 20 days. All right? And at the close is greater than the low. So that means you didn't close it of yesterday, so one day ago. And the close is greater than the open, so it's a green candle. So to be a green candle low, you have to take out the prior low. You have to close above yesterday's low. And you have to be green, meaning the close is greater than the open. The red candle high is the highest day in 10 days. You take that out. The close is below the high of yesterday, and the close is below the open and gets you a red candle. Very simple formula to find what I think are great reversal signs. So if I go back into Yahoo, what do I see? I see that quite possibly you had a green candle low. Let's see if it was a green candle low there or not. 1459. Nope, it didn't close any lower. But you had a big run, and you had a red candle high here, although it didn't close lower than that high, so that would be averted and not counted. So that doesn't count. But you do have a green candle low here. And is this a potential reversal sign close to the 50-day moving average? It opened, it closed above the open, so it's a green candle. The low took out the prior low, and it closed above the prior low. So this truly is a green candle low and could signal a reversal. So I'm scanning the market looking for green candle lows, and here's a red candle high. Here's the highest high in the last 10 days. A red candle, meaning it closed below the open, closed less than yesterday's low, or high rather, and it resulted in a small pullback. So here's a green candle low, which could be a reversal sign for Yahoo. So I look at these and just, whoops, not what I wanted to hit, but that's okay. And just as I was showing you in TradeStation with the high jump, I actually can scan during the day for candle lows. And in fact, I take a big watch list. And during the day, I'm looking for pocket pivots and a number of different things. And these are clues. And so when I trade during the day, I start with the list that I found the night before. But I add things to the list based upon the scans that I might see in my TradeStation radar screens. All right. So Yahoo made it here. Maybe it's bouncing here. See if there's anything else I wanted to go through. Oil refiners love this group. There's a number of these that are attractive. We've talked many times, DK. There's a lot of volatility in the earnings. It has to do with shutdowns, plant problems, debt issues, etc. But this group as a whole has been on fire this year, and DK has gone sideways for 3 months, had a kahuna pocket pivots Wednesday and Thursday, and took off to the races on Friday, and looks like it's got more room to go based upon the earnings coming into the stock. Western Refining, I went on the board, I think, on Tuesday, and I said, look, green candle low on the 50-day moving average. I like this position for a point of entry. And had you bought into it and set your stop perhaps at the low of this day, you would not have gotten stopped out, and you'd be in a stock that I think is going to continue to go up this week. Holly Frontier is a leader in this group, nice lower left, upper right, in a good buy time. It's pulled back to that 50-day moving average, free parking. It's got red up here in the bongos I don't like, but it has earnings per share growth, which I do like. Multiple of 5.9, pays a small dividend, and a growth rate much higher. Others in the group, Tesoro, had been a market leader, recently has had some choppiness. Look at the earnings per share coming in the next 2 quarters, trades at a multiple of 9, pays a 1.4. You might see some action in that one. And then CBR has been a leader, lower left, upper right. I hope you own this stock. We talk about it every week on the web broadcast. Everything is green except for the short-term bongo. Not quite at the high jump, but we'll be there soon. And then one that I think is the next one to run is Alon, ALJ. Sort of a high tide flag, ran up from 14 up to 18.5. Pull back here in a new base. Might be getting ready to run again. Great earnings per share growth. I think this is an Israeli-American company, if I remember correctly. All right, that takes care of refiners. This is what top-down investing is, looking at the best groups and find the best groups in them. Are you into airlines? Delta Airlines, I've seen some upgrades and targets set at 20. What a nice bull run, 10 to 13.5 in less than a month. Great earnings per share coming into the stock, percentage growth rate. Had a great September. If you look at something like Market Smith, you can get some earnings a little further out. S&P is a little bit stronger. Nice to see if you're long. And so if I put in DAL, I think one of the things that's going to drive this group fundamentally is if U.S. Air takes out American, you're going to reduce seats and the planes will be even fuller and higher cost. 252 for 2013, at a 38% growth rate. I mean, what is this? This stock has got to be worth more than $14. That's Delta Airlines. Buy at your own risk. They used to say the way to make a billionaire is have him put $2 billion into an airline, and a year later he's got $1 billion left. I'm not sure that that's actually changed from the risk, but it does look like we're going through a time when these stocks are going to do well. Republic Jet is a little one. It's got some big earnings per share coming in. I remember seeing this on my review earlier today. Let me just take a look at this one. $1.48. So it trades at a multiple of 7. A stock that's growing 30, 40 times. Hard for me to believe it's going to continue to trade at a multiple of 7. But if it did, that with $1.48 of earnings, it's worth $7, $9.80, about 10 bucks. It trades at 8, $2 out of 8. That's a 25% gain. So I think there's a lot of upside opportunity in Republic Jet Holdings as well. Back. What's weak? Steel. I mean, it's had a little bit of a run in steel and coal, so the China-driven material stocks clearly slowed down this week. If we take a look at two of these, Cliffs and U.S. Steel. Cliff, being an ore and a coal company, had a nice little run, sort of a red candle high, and it's traded down from there. Pocket pivot down, makes money, but just decelerating earnings growth. And then U.S. Steel, which, if you look at these, they've had nice runs, but certainly is slowing down here. We'll see if it can hold at the 17-day today being Monday. Pharmaceuticals, a number of things pulled back, led by Watson. They've had some patent issues on the generic side. And you could see if you were a shorting person, and I like buying puts, put spreads, contra ETFs, and much more rarely buying or selling short. Turning red here, failed at the 50, likely trades down to the 200. Perrigo, which makes a lot of products to treat the flu, surprisingly, also failed at the 50. My guess is, Elliott calls these ice hold failures. He would say it's going to take out the most recent low, so it's got a few points to drop before it recovers. And if this market rolls, stocks with little growth trading below their multiples might be subject to falling. You can see the momentum indicators have turned red. Coal is just like steel, iron ore. Now the banks, the big banks are always on this list. They had a 5-day change, down a little bit more down yesterday. I can't remember what the news was that suggested that, so let's just do a right click, more info from the web. Here's Bank of America, looks a lot like Ford, pull back to the 17-day All right, so I guess they pulled back because the announcement that they're going to be paying out a lot of money to resolve claims. Bank of America, other big information was it sold off some assets to a couple companies, which I hope to remember to mention before I say good night. So that's how I do my top down. I found a few selections. I want more, so I do a thing called group inclusion filter. I did that earlier tonight. I am not going to go back and redo it. In the essence of time, I'd rather show you the stocks. So these are the stocks, and what I do here is I look through a number of my groups, and I try, if these are strong groups, which stocks are in most of the strong groups. These should be the ones to look at. And so I ran it. These are the stocks that I found. Some of those we've seen. Let's just go into right now and jump into HTSI. I put these in a directory. Group inclusion filter. Excuse me. Make sure I actually. All right. Close this down. Back in here. Warehouse view. Look at the first 10 or so. Then I'm going to look at my buy watch, see if anything pops out at me, and then I'm going to say good night. JF All-Stars, and I want to go in scorecard no index. These were the top 30. Some got knocked out from my settings, but let's take a look at these real quick and see if there's anything in there that looks viable. Lumber Liquidators is in my watch list for tomorrow if it trades above the close on Friday. Sort of a saucer pattern here, pocket pivots, turning mostly green on the momentum indicators. Good earnings per share growth, earnings higher than the price to earnings ratio. This is a stock that if the market goes up, I expect Lumber Liquidators to do well. On assignment, watch this thing go sideways, got boring, and then it gave us a nice signal here with the kahuna and a big up day on the 50, and it took off the next day. Very viable day back here. Hit a shooting star on Friday, so I don't think anybody wants to buy that at the open. We talked about Winnebago and Thor as leaders. We talked about the refiners. There's Delek, DK. Talked about Seagate, great earnings, not much growth, a small multiple. Those on the board that listened to my comments on Celgene made some money because I went on Monday. That was one of my, I think, 2 good calls, I think, on Celgene. And it just looked to me like it was setting up for a breakout. And I put out a little thing on the board, said that Celgene was looking good down here, and it broke up 10 points, had some buy ratings come out. They reaffirmed their earnings estimates through 2017 and beat this quarter. The brown is something new I'm trying called the Bango, which I got from one of my viewers who's also recently married into a close family of ours, and he came up with a different assessment of the hangover using RSIs than others. Hangover of the, not hangover, that's what you do after drinking too much, high jump, and I'm looking for other signals of when to bail and take profits. And you can see on Celgene the high jump is up at the top, so that's not a good thing. Regeneron, it's been an on again, off again, love story. I like to buy it on pullbacks because it keeps giving us pullback opportunities. It had a decent last 10 days. We'll see if we can get back down to the 50. This is a Chinese company, I believe, Qihu. Maybe, nope, it's not Chinese, it's New Mexico, kind of like China to me, just kidding. Had a nice run up here, a lot of hanging man. You know, when I see this pattern, you just think that, well, maybe it's getting ready to drop, and then it gets bid up at the end of the day to close with a hammer at a high. Doesn't make much way in the earnings, trades at a very big multiple. Let's go into MarketSmith and see if there's something that we need to know about from an earnings perspective that might explain what it's doing. I do know a couple weeks ago it was highly ranked on my chart. So it's an IPO. Relative strength is quite high. Looking at $1 in 2013, which is 40% growth, and it trades at a multiple of 78. It's an expensive stock, not quite at the high jump. I probably stay away from this. It looks a bit overpriced from my perspective. SolarWinds is an IT technology play. Not a perfect rounded bottom, but kind of a cup, maybe a handle, maybe too much descending. Perhaps setting up to run again. Don't love the earnings per share growth. Trades at a multiple of 51. I'm looking for reasons to buy it and see it here. Here's a leader, CVR Energy. It'd be nice to buy it on pullbacks to the 50. Whether or not you get one again, who knows? I tell you, this company, Stratasys and DDD, amazed me. 3D printers. And there was a Law & Order episode I watched this weekend where they made a gun, used the gun in a couple of shootings, and it was a working gun made from a technical specs picture and printed. Fascinating story. Clearly hot products, and probably products that will be important for years to come. This guy's clearly earnings are slowing down, trades at a massive multiple of 68. Let's just take a look in MarketSmith and see what the earnings are going to do. $2 growing 36. So that supports a $72 to $100 price. It's in the $80 range. I don't know. I look at this as thinking it's fairly priced, and probably not one that I want to jump into. The other one, 3D Systems, I'm concerned that the earnings are slowing down. Priced high, in the process of big runs, probably fundamentally changing the world we live in products. Don't know how big of barriers are to get into it. Thor is the RV business we talked about. Alaska Air is another airline. What a beautiful pocket pivot, big day, taking out multiple moving averages, little pullback at a run. Clearly getting extended here, started going sideways. All right, what do I get to this guy eventually? 3 companies put on your radar. We talked about it the last 2 weeks. WAC, OCN, and NSR. These guys are buying those prime, subprime portfolios from Bank of America and others. They are running them. I guess it's a great business if you buy them at a discount rather than the original originator. Why do I like these? Look at the earnings per share growth. All right, so this guy trades at a multiple of 30. OCN is probably on this list too. Well, it's on a different list. Let's just go into MarketSmith. $6 in 2013 at 131 growth year over year. If you give it a 20 multiple, it's a $120 stock. If you keep the $18 multiple, it's a $100 stock. It's trading at less than $50. You look at OCN, 446 is trading at 42, 210% growth rate. If it gets to 446 with a 42 multiple, it's 160. Discount it 50%, it's an $80 stock. I think that these groups have a ton of gas in the tank, and that unless they have a fundamental problem in their business line, they're ripe for a big up move. Michael Kors, nice stuff, nice stores, pulling back, maybe getting ready to run, got great earnings per share coming in. What I'm going to do with this one, I put on a watch list. And if I see a kahuna or a pocket pivot tomorrow, I'm probably in. If it gaps up, has a strong day, I might be in. If it pulls down and closes up for the day and gives me a green candle low, I might be in. I'm not in yet. It's one of the ones that I'm going to put on the list. Rackspace, a cloud company, a nice break, gap up, and run up right, lower left, upper right-hand corner. In my buy list, which I'm going to put up there so you can take a look at, my buy list sometimes does well. And when the market does crappy, my buy list does crappy too. And you can always stop your computer at any time. We've looked at almost every one of these. Let me see if there's a couple that I want to point out. One of my favorites and one of my holdings is Eagle Material. It's probably getting long in the tooth, but this is the ultimate lower left, upper right-hand corner cement maker tied to the home building industry. Mostly green, had a pocket pivot on Thursday. Inside day on Friday, kind of a spinning top, great earnings per share. This has been a litter in the market, probably will continue if there's any strength in the market. Microsoft, not a high growth stock, but at some point, just like I bought Intel, I like to buy stocks that are beaten down. So here's been hit that low a couple of times. I put my stop right below that. I buy this stock because it has bullish candlestick, a kahuna, has earnings per share coming in. Let's take a look at it out in the land of MarketSmith. I haven't done that yet, so I might be unhappily surprised about the earnings. $3, has a multiple of 10, 287. So this should be a $30-ish stock. If I remember correctly, it has a ton of cash on hand as well. Big stock, $225 billion stock. It hasn't moved much in a long time. But why would I buy it? Because I'm getting old, and I kind of like when I see a stock that has growth potential that has a dividend yield of 3.4%. So that was one that I liked for the dividend. Take-Two Interactive, I found was interesting as well. Remember GameStop showed up on the positive force best of groups? Well, GameStop has Take-Two Interactive software. Look at the earnings per share coming in. And again, I haven't looked at this in MarketSmith, but I see the need. So let's take a look. Is that the right? 229, 18. So here's a turnaround play. 18 cents, not that exciting. 229 is. And you can buy this stock at 12 bucks. If this brings $2 into this stock, what's it worth? 20? That's a big move from here. Again, not a true HGSI growth stock, but more of a value play that I saw in my chart review. In that world, you also have Electronic Arts. Similar pattern, but perhaps not as nice a pattern. We had a pocket pivot with some volume on Friday. Another one that I liked was Flagstar Bancorp, and this is one that we've watched on the way up, nibbled at it with some of the pullbacks. Got a pullback to the 50. Now it gets into my pullbacks waiting to happen list. And in fact, in my spreadsheet, it goes into the pullback waiting for a signal. And this is a separate group that I'll watch real time looking for kahunas, looking for pocket pivots, looking for green candle lows, maybe looking for pocket pivots intraday. So that's one that I thought was interesting, but I'm not going to buy this without a green candle. It's got to give me a reversal signal. If I can get a reversal signal on the 50 in a stock with this kind of earnings, I'm very excited. Aegean, I know I keep wanting to stop. I like this chart a lot. Take a look at this because I think this one's got some earnings coming in that I thought was interesting. ANW. Deep pullback, deep pullback. Earnings coming back, trades at $6 and change, a multiple of 10. I'll take 10 bucks if I can get $1 and a multiple of 10. That's almost a double from here. And with option strategies, it could be more. What I like about it, everything has turned green. It had a pocket pivot on Friday, and that might be something to look at. And then I want to finish with a question. Somebody must know this company, Virgin Med. I've been in and out this. I wish I would have been in and forgot about it. What a beautiful pattern. I look at it over here. In other sources, I see the same earnings per share. So if somebody knows this company and can, on the HTSI board, tell us why we should or shouldn't be in it. You know, a picture tells a story when you start to look at a weekly chart. But I'm not sure it tells me a bad story. So obviously this is a stock that probably had some, I wonder if it had some reverse splits. We go into monthly. Yeah, it's pretty ugly here in the in the 09 time period. This is one that just really barfed all over the place when the market got clobbered. But it's great relative strength. It's at near all-time highs. But what I gotta like about this stock, look at the earnings per share it says are coming in, and I don't get that, and that's why if there's somebody out who's listening, you know, sort of to play it forward or give back, why don't you tell us on the board why we should or shouldn't be in the stock? What a beautiful chart pattern, and it's certainly moving nicely. On that note, let me see where we're at. We're not there. Futures, 3.80. Dow up 30. NASDAQ up 5. Looks like Asia opened up. So maybe this little bull run's not up. I echo again that I am a little bit concerned. We've moved very fast, very far. Some digestion might be indicated, but you can't argue with what the market's doing. For those that are Thinkorswim fans, you can scan for green candle highs, red candle highs and green candle lows, even within Thinkorswim. I'm going to work with Bob and make sure that these will be available to folks who participate and attend the March meeting. See, not only will you get great education and great food, but you'll get some tools that you can take home and use as well. On that note, I will say, again, to those who have been on before, Happy New Year, safe trading, and we'll see you when I do this next week. I plan on continuing to do these on a nightly basis on Sunday night for posting late Sunday, and we'll do a live one every 3 to 4 weeks. Good night, everybody. God bless. Good night.